Good morning, everyone. Hope everybody's doing very well on this Friday morning. This is Travis Witherspoon from Carter Kyle Capital. Trade with Travis on YouTube, Carter Kyle Academy, obviously with our Facebook group. Hopefully, everybody's doing well. This is another session of Trade with Travis. Where we end up going through live Forex trading and analysis. If you're interested in being able to learn a little bit more, you can be able to go to carterkylecapital.com / start here. I've inside of one of our free webinars and be able to go from there. While I get everything set up, I want to go ahead and go through the disclaimer. I'm not a CTA, so I'm not going to tell you whether to buy or to sell. What I'm going to do is teach you education, and from that education, you can be able to make your own informed decision. I understand that Forex involves risk. It involves risk of being able to make money, also involves risk of being able to lose money, so please keep that in mind. And understand that past performance is not indicative of future results, which means that if you end up making money yesterday, not promised that you can end up making money today. So with that being said, placing in the last few tags just to be able to make sure everybody can be able to see it. And once again, like I said, I hope everybody's doing very well on today. Obviously, Fridays are a little bit different when you do anything. Typically, these are days that you want to be able to get in, get out, see what you can be able to get, and be able to go from there. Hopefully, your trading has been going well. We end up doing very well, especially at the beginning of the week. Right now, looking at where we are at this particular point, I think that we're doing fine. End up touching on some of that Bitcoin move that ended up happening yesterday, and we'll see how my EAs actually end up doing while we're taking a look at most of this stuff as well. Let's see. I just want to make sure that I have all my pages and stuff set up. And hopefully y'all don't hear that weird noise that's in the background, that static that's going on through my speaker. That ended up happening yesterday, because right now I can hear it literally. I can hear it in my ears right now, and it's aggravating. But I got to figure out how to be able to stop that noise. Obviously, let's see. All right, so let's do this while I'm getting everything else set up. What's going on, Deron? I hope everything's going well with you. Everything's going well with me, big dog. I hope everything's going well with you. Hopefully, let's go ahead and take a look at some overall trading pairs to see if we can make some money together today. What you say when it comes down to that? I don't have my glasses on today, so ignore my contacts. And I'm too lazy to go upstairs to go get them. So we're gonna rock out like this. If there's something that I end up missing, obviously I can be able to catch back on to it. But we end up going from there. So here we go. Economic calendar. Let's take a look at what's happening today. Today, what we're going to end up seeing is that there's really no information that is happening. Oh, there it is. Let's see. Only one look at this week. Here we go. Most of the information has already done happen. We end up having the GDP that ended up coming out was at 1% for the pound. It was actually pretty good. That kind of pushes on to what ended up happening earlier this week when the pound basically started to turn around. Remember, we ended up talking about how we wanted to be able to catch on when the pound ended up having that little retracement to be able to push back up towards, I think it was 1.3 something. I had to take a look at it again. But if you end up catching on to that move, that was something that we ended up talking about last week. Hopefully you end up making money off of that move. Today, what we're going to end up seeing a little bit later on is going to end up being Michigan Consumer Sentiment Index. That's going to end up being something that we need to pay attention to just a little bit. Doesn't really affect the market all that much, but that will affect the stock market a little bit later on. So when we start talking about indices, it'll kind of make a little bit more sense when we look at that. Let's go ahead and go into the U.S. dollar index. Remember, we look at the big three. The big three is always the U.S. dollar index. We always take a look at oil. We always take a look at gold. The reason why we look at those three is because we want to see what's going on with the U.S. based pairs. When you look at an index pair, essentially it's a combination of all of the pairs that you're basically looking at between the U.S. based pairs, whether it's Euro, United States dollar, U.S. Japanese yen, U.S. CAD, etc., etc. If you can look at the index, you can kind of see what's happening with the U.S. dollar in general. Right now, what we end up seeing is this. We talked about how this market was going to end up pushing up and going up to this yellow zone last week after end up hitting the support. Right now, what's happening is that the market has retraced over the course of the last 5 days. It did not hit the support back down at here at this little bottom area, but we do have a strong move to the upside right now with a counter trend line break. So what would that say towards today? That would mean that we'll look at Starting to see if there's any type of buying opportunity for the U.S. dollar going into the 8 o'clock, 8:30 hour, and being able to see if there's anything there. If there is, then after that, we'll take opportunity to being able to buy. If there's not, then we'll just stay away from it and be able to go from there. But short term, I would say that the U.S. dollar is somewhat strong, and we're back in the buy zone, which means that it's going to end up making it even a better trade to be able to look at going into 7 to 10 days from now. But right now, currently, from a 2-hour perspective, we're definitely in the sell zone for this overall move. So some of the pairs that we're going to end up looking at when it comes down to the U.S. base will end up being in good positions to be able to get in for us having value. But right now, if I'm looking at it from just a collection of all of the index pairs right now, they're probably a little bit overextended. So I will kind of wait to see if we can get a little bit of a low price, a little bit of a dip in the price on the 2-hour to be able to go back up and buy again. Okay, hopefully that makes sense when it comes down to that. So U.S. dollar is considered to be short-term bullish. Obviously, we know that it's long-term bearish. We've been talking about that for weeks, but it is short-term bullish. I'm looking at being able to get in from there. Oil. What's the overall game plan? We're talking about long term. We want to be able to buy oil up to 60, basically the 65 to 67 dollars when it comes down to the overall barrel. We ended up talking about last week or a few weeks ago how we wanted the market, or how we could have got into the market at 52 because it held that strong support. Since then, the market has pushed up, and we have gotten into the sell zone off of this pair. So once again, what does that mean? We're looking to be able to see if we can get a little bit of retracement. Now, if you're interested in being able to sell this one, this will only be scalping opportunities. I don't like it. I don't like looking at selling on oil, at least not right now, unless I know that it's a true position to be able to get in. So, when I'm talking about that, we're looking at the weekly being in the sell zone and the daily being in the sell zone, kind of like what's happening right now. That will end up giving you a little bit more of a stronger indication that the market will fall. And while I'm saying that, we see that the market is in the sell zone on the weekly, and we see that the market is on the sell zone on the daily, so we do have trade alignment. Go figure. Let's do this. Matter of fact, let's go to the 2-hour, and let's see. If we're at a high price, I might end up taking an opportunity of being able to buy this. Being able to sell this. We are in the buy zone right now, so that means going into next week, that's what I will look for. I will look for being able to see if we can get a little bit of a high price, and after that, I will look at being able to sell it down. The question is, where would I like to sell it to? We'll do it based off of the 2-hour. We'll do it based off of the 2-hour. I won't do it based off of the daily on this one. And so the extension is already hit on this overall move. So the next retracement that we'll end up getting will end up being from this overall movement right here, from this high and this low. So I will look at allowing the market to retrace up possibly to 58, somewhere around there. Once it does do that, then after that, I will look at being able to sell it down to 56, 54, which kind of makes sense because we see a little bit of support right there. We have to go all the way back and look over to the left on the daily to see if that makes sense. What was the overall move for the long-term zone? But once again, I expect that the market will kind of retrace and try to at least get back into the 54.50 area, somewhere around there, and then after that, take a trading opportunity from there. So I am interested in being able to get in for selling. Once again, it'll only be for scalping. It wouldn't be for the long-term move. But U.S. oil is going to end up being short-term. Bearish based off of what I'm looking at right here. But we know that it's long-term bullish going up to $67 a barrel. Okay. Which means that the Canadian dollar should be either in a should end up either being consolidated or should start to fall a little bit. Okay, going from there. So let's take a look at gold. Let's see, XAU USD. As we look at gold, what are we looking for? We've been talking about this market, and we're saying that this market is expected to fall. Overall, I expect that the market is going to end up falling all the way down, possibly back down to the 1760 area. We end up having a strong push back up to this third zone that we end up talking about, where it got almost up to 1858, but it never hit in that zone. So the question is, where is it going to fall back down to? Ultimately, I think it's going to end up falling back down to right around the 1800 area. Right now, it's at 1816, so you at least got another 16 points for us being able to get in. The stochastic and the chart are not playing well with each other when it comes down to this movement. The stochastic is saying that the market should be bullish. The market is basically moving bearish for this overall move. And we also end up noticing that the U.S. dollar was somewhat strong already earlier this morning. So the question is, are we going to see further downside movement, or are we going to end up seeing that the market is going to end up stagnating today? Because of that, I'm not going to look at trading on gold today. There's no reason to be able to do that. I will kind of see how the market will kind of play off, and then after that, see what's going to happen next week for this movement. So U.S. Japanese yen, we'll probably end up seeing a little bit more bullish movement compared to that overall movement. What's happening with this? So I think I'm going to probably look at U.S. yen as the first trading pair to see if there's any type of trading opportunity for us being able to get in. And we have a counter trend line break already for this overall move. We end up seeing that the market end up going all the way to the market end up retracing to the 5-0 position before giving a strong move to the upside on the daily. The next position where the market will end up going to is 107.27. We talked about being able to get in on this 2 days ago and being able to make that move. We talked about also that this overall support area will be one of those areas that I have to be able to break before it's being able to push up. Now, overall, once again, I think that we're getting strong value right here. You want me to be perfectly honest? We can be able to place our stop below 105, below 103.30, which at this point will end up being probably about 170 pips. And go after 227. So it's a little less than a 1 to 1.5 when it comes down to risk reward if we're going to end up doing it from that standpoint just off of the daily. From the 2 hour, you can probably get a better stop loss when it comes down to that move. The question is, where are we at on the 2 hour? And right now, because we've seen that strong push and which kind of matched up with what happened with the U.S. dollar index, what I would look for going into the weekend from a Sunday to Monday trade is that I would love for the market to be able to fall back down somewhere to this area. If it can fall back down somewhere to that 104.70 area or anything else like that, I think that we end up getting strong value for being able to get in, looking at being able to buy. Let me see if that kind of matches up with some of the previous support levels. And if that does match up, then after that, I am very much happy to be able to get into that position. So this is the area that we're talking about based off of the daily. I'm going to stretch this out. We can see that we had some overall highs in this overall area, but it could mean that the market could fall possibly a little bit lower than that. But I think if it does, it'll touch a little bit in the short term. Primary focus on this one going into this overall week is market is in a sell zone. I want the market to be able to fall. We're not going to chase it today because it is Friday. We'll allow the market to be able to fall, get into one of these zones to where we can be able to make some hay out of it. Let it fall somewhere around this overall area, possibly even lower to this actual support area. Right? Let's see. Let's do it again. Let's zoom out just a little bit more. Make another box. Gonna possibly be able to fall back down to this overall support area right here as well. Anywhere around this zone, I am interested in being able to buy because all that's going to end up doing is lowering our risk for as I stop and giving us better value for it, being able to go out and take profit zones. Okay, so obviously the D extension on this one will be 105.93 if you're looking at a short-term move. You're looking at a longer-term move or a swing trade to be able to get in, to be able to stay in. 107 would end up being that position for it, being able to do that. Once again, because the market is in the 2 hour sell zone, I'm going to wait just to be able to get a little bit of movement, and then after that be able to buy it back up. Now, once again, because this is Friday, this move may be very quick, and then after that may pop back up. So you have to have your alerts on so you can be able to take a trade that will end up making sense from that position. Okay, let's look at U.S. CAD. We said that U.S. CAD should pop up as well, and that's exactly what happened. The market fell at support at 126.78. Really popped right out that zone that we were talking about, that we put in a line right there. That's really why it's so important to be able to understand support resistance. This one is actually in a better position to be able to look at trading just a short-term retracement move. I don't think. Obviously, the market is still bearish, and we can look at this from a weekly perspective. The weekly is moving up in the buy zone, but that doesn't necessarily mean nothing. It just means that if we look at price action is going to end up being more important. From this price action point, this market has failed down to that support level of basically 127 multiple times, and it has bounced up, which means that this is giving us a strong indication that the market is going to end up being bullish. With that being said, with that giving us a stronger indication that the market is going to end up being bullish, then what we should focus in on is basically looking for short-term bullish movements and being able to see what we can be able to get out of it. So I'm going to erase the previous plan that we were looking at, which was right here. And what I would pay attention to, just like what ended up happening with the U.S. yen, is seeing if we can get a slight retracement. Possibly the market may fall back down to this level one more time, and if it does, then I'll be interested in being able to buy again. But that will be basically a 40 pip drop if it does happen like that, and then being able to buy off of that support level to go back up. Now, sometimes when you see it like that, typically because the long-term movement has been bearish, you may end up seeing that the market may end up breaking. So this one I'm going to be a little bit more cautious on compared to looking at the U.S. yen and being able to buy up. But I do like the opportunity. Once again, that's more of a Sunday to Monday trade. Let's see if we can find a trading opportunity for today. I'm going to go back to trading view. I'm going to look at the overall scanner, so see what we have for the scanners, and then after that, may end up taking the opportunity. Let's see. Australian New Zealand dollars at 21%. The RSI is at 25. Doesn't look good. Aussie yen is at 20.4 for the ADX. The stochastic is at 65. No, it's already done happen. The move already done happen. U.S. Swiss franc is at 19.21. The stochastic slow is at 15, but the RSI is at 50. Let's take a look at U.S. Swiss franc. Let's see if there's anything decent out of that. The market's been long-term bearish. See if there's any type of move to be able to take based off of this movement. We go to the daily. If we look at it, the market has been moving bearish the whole time. Since then, the market has given us a little bit of a retracement. We talked about earlier this week that we wanted to find this in a overall sweet spot. We had a breakout. We're looking for basically a retest and a counter trend line break. That has happened, and it's literally happening right now as we speak. I actually like this for the overall move because once again we have a deep retracement. The market didn't even hit the market haven't even hit the 786 with this deep retracement. We're seeing more of a morning star that possibly could be forming. The extension on this one will be at 91.36 if the market does move up long term for with that movement. Currently, right now, if we're talking about that's about 200. Well, it should be about 200 pips, somewhere around there. That will be 254 pips. I end up placing my stop at 82 pips or somewhere around there. So you're talking about a 1 to 4 risk reward ratio, 1 to 3.5 risk reward ratio. I do like that more than any of the pairs that I've looked at. The question is, has the move already happened, kind of like what happened earlier this morning? That answer, once again, is a resounding yes. Now, here's the deal. We see that the market end up holding and having some support right here. We can do two different things right now. One, we can average into this position and be able to hop in. Let's say, hypothetically, you wanted to hop in right now. You could average into this position and say, okay, well, I see that this market has broken out, but we're looking for a slight retracement, and I want to be able to buy back up. Okay? But that means that it literally fell back to the original position where it started at. And I don't think that is going to end up possibly happening, at least from this overall move. Let's go to where this move actually started off of the 2 hour, and that may give us a little bit more clarification. But most of these moves happened earlier this morning. If we're really paying attention to that. So the market has bounced off of basically bounced off the 5-0 for that overall move, and it's popping up towards the upside. Even though the 2 hours in the sell zone, this may be one of those pairs because it moves so slow that you could get in, even though the 2 hours not necessarily in the best position to be able to get in. And know that if you're staying in this overall pair, you're staying in it for a while. So you could possibly be able to average in a little bit more and be able to go from there. Now, I could say the same thing with the U.S. Swiss franc, and I can say the same thing with the U.S. Canadian dollar. But if we look at their daily trading ranges, U.S. Japanese yen moves faster than the U.S. Swiss franc, and the U.S. Canadian dollar definitely moves faster than the U.S. Swiss franc. So if we're talking about how much this market could typically move, or how much it could move from this overall position, we're talking about maybe 16 to 17 pips. Now, the question is it worth waiting later on today to see if the market is going to end up retracing like that or either pushing back up? That's a question that you will have to ask yourself when it comes down to this one. For this one, typically my rule is always you don't buy in the sell zone. It doesn't make any sense whether if it's in a 2 hour or anything else like that. And typically when you have a breakout, you're going to end up having a retest. But we're talking about being able to average in right here. It might be one of those pairs that we can be able to ride out this weekend, and then after that possibly be able to get in on Sunday. So for this pair, and because of how slow it typically moves, I actually am going to end up being interested in being able to take a buy right now. Let's see what we can be able to get from a. Let's see what would the stop be, and let's kind of play it out and see what would that look like. Let's say we got $4,000 inside of our account. Our active trading date will end up being today, so 2/12. Speaking of this, because this is the weekend, obviously happy Valentine's Day to everyone because that's going to be on Sunday. Also, me and my wife ended up getting engaged on the 13th, so happy I Do Day to my beautiful wife. So I'm going through that as well. Weekly is considered to be, let's take a look at this while we're going through it. The market is not necessarily in the buy zone, but I'm still going to call it short-term bullish. Okay, so the daily, I'm going to end up calling it bullish. Let's see what position is it in. This will end up being more of a, this is considered to be a short-term R2. We look at the weekly long-term, the market should be in the buy zone. Let's see. Okay, it's way out the buy zone, but this is more of a R5 if we go based off of this previous movement right here, because that goes my start of the move. Actually, the move, did it hit? Yep, it's an R5. So this is a up R5. That's going to lower the percentage a little bit. We do have a yes, and our entry will be off of a R2. The stochastic, is it in the buy zone as of yet? No. Do we have a counter trend line break? Yes. What is the overall stop for the overall position being able to get in? If we're looking at this based off of the daily, going back to what we ended up talking about originally, stop loss will end up being below 88.38. So let's say 88.30 for just for that sake. I'm going to say 90 pips for our overall stop. And our reward that we're going after would end up being I'm going to say 255 pips. We'll end up going 0.9135, 0.9135. So take profit 9135. Stop loss.
Yeah, please call.
88.30 is the stop loss. Entry, I'm actually going to take an entry right now. I'm just going to go ahead and do it now. Once again, like I said, I average into it if I can be able to get another opportunity to be able to go from there. So that means that my reward will end up being this. With a stop loss of this. Once again, you do not have to take this trade if you don't want to. Obviously, I'm looking at this overall position and saying that we're bouncing off of this overall spot. We're starting off with this overall looks like a morning star. It hasn't confirmed yet. It won't confirm until 5 o'clock today, and the market will be in the buy zone going into the weekend. So you may end up getting a better position than what I'm doing right now. I know on Sunday what I'm going to end up doing, and it's not going to end up being paying attention to the chart. So I'm going to go ahead and take this opportunity to be able to get in right now. Let me go ahead and open up my charts and be able to focus in on this overall entry. Let's see, U.S. Swiss franc, new order. Let's see. I'm gonna go 5% off of this one. So my risk, I didn't put in my reward. That's $255. So I have a risk of $200 to make $547 if I decided to be able to do that. So that means that if I wanted to be able to do this, I can go with 2.1 mini lots on the overall entry. I'm going to go ahead and do that now. 0.21. Stop loss is at 88.30. Oh, let's see. 88.30. Take profit is you hit your elbow. Yeah, I know. You hit your funny bone. 9135. And this is a trade with Travis. This was today's date is 2/12. Okay. I am in the market on that one. I'm in the market on that. We got a few more minutes before I end up getting out of here. So let's go ahead and take a look at that real quick. But that is the trade for today, and being able to get in. Once again, I'm going to leave this one in on the screen. Once again, a little bit more. Once again, U.S. Swiss franc. I'm looking at being able to buy. I know the 2 hours in the sell zone. I know that the market moves. The market doesn't move as fast. If I do miss out on some pips, it'll be about 16. If it does happen and retraces back over to this area. If it does push up, I'm looking at this one as a long-term move going up to the upside. I'm looking at getting into this overall pair and watching this move go up to 91.35 with a stop loss at 88.30. This is a swing trade. This is one of those trades that I'm getting into and just letting it ride out for that one. Let's take a look at let's get off of that. There you go. Let's take a look at US 30 and NAS 100 and see what the overall move is with those. I actually ended up making $200 off of I think US 30 yesterday, based off of the EA. Now let's talk about it. US 30, if we're looking at being able to make a move, obviously the market is bullish. We're looking at only buying, but the market is in the sell zone. I'm not even going to pay attention to that pair. Don't even want anything to do with it. So we're staying away from it just by looking at that. It eliminated itself because it's not in the right zone. Same deal with this overall pair. The market is bullish. If we're looking at a overall pair to be overall trade to be able to get into, we'll be selling, but the market is bullish. So unless you're just one of those people that's looking to be able to scalp and try to make something out of the market, you could be able to get into this for it being able to sell. but obviously the odds are on the market being bullish. Now, guarantee if we look at the 2 hour, the 2 hour is not aligned either. And if we look at it, 2 hour is not aligned. But hypothetically, if the market will fall, because we have been seeing drop offs and the market has been pushing up, if the market does fall, it's going to fall back to that yellow zone that we end up talking about a little bit earlier this week, where we end up making money on the buy from that overall movement. So if the market does fall, we're talking about every bit another 200 points. The market does move typically right around 250 points a day. So it possibly could go a little bit higher, possibly could go a little bit lower. At this particular point, I'm not risking it on Friday. There's no reason to. I hang out with my boys, and then after that, we'll see what happens from a Sunday to Monday trade. All right. Now, with that being said, if you like what we end up doing, and you want to learn a little bit more about how we end up trading each and every day, hopefully, the U.S. Swiss franc trade will actually end up making you a little bit more, or making you some money as we go through and take a look at it this week. We actually end up faring pretty well. You can go to cartercowcapital.com/start here, hop inside of one of our free webinars. That is literally a 60-minute webinar to where I privately coach you and talk about what I end up doing each and every day for what's overall training. Also, on the 19th of this overall week, we're going to end up having our hedging and advanced strategies when it comes down to the US 30 and NAS 100, being able to talk about how you could be able to make make money in a directionless market. Meaning that if you don't know what the direction is going to be up or down, you can still be able to make money based off of being able to hedge. And I talk about how we end up doing that, what type of strategies you can be able to do from there to be able to place in. If you're interested in being able to learn a little bit more, obviously you can send me a message and be able to go from there. Or basically this guy on here, hop inside of the class. You'll see some more information on some more marketing about that a little bit later on my personal pages. And also remember, we have our boot camp. A week-long boot camp, which is going to end up being February 22nd to February 26th. If you want to learn how to be able to Forex trade, you want to learn how to be able to indices trade, learn how to be able to basically trade with other people's money and be able to go from there. You can be able to hop inside of that session and be able to hop on. I'm also going to end up sending out some videos on what I've been doing for us, weight training and strength and conditioning and everything else like that. Once again, follow me on my weight loss journey. Remember, I started off the beginning of the week at 260. I looked at the scale a little bit earlier today. I'm at 257.0, so that means I'm 256 in my mind. So I literally got done with my cycling workout earlier this morning. I'll show you what my setup is going to end up being in one of my videos. You can see that on my Facebook page. And then after that, talk about some of the workouts and the overall workout plan that we're going to end up doing. Hopefully, end up motivating you just like some of y'all have been motivating me. Like always, plan your trade your plan. Everyone, y'all have a good one. Say bye-bye. There we go.